Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. Thank you so much for joining us. My name is Matt Sands, and I'm here to help you make the most of your mineral rights and royalties. Hey, Justin, how are you doing today?
Doing great, Matt. Thank you for having me, as always.
Absolutely. And today we are going to talk about mineral rights news for May 2019. But before we get to today's show, just our usual reminder, please subscribe to the show on iTunes or wherever you get your podcasts, and please leave us a rating and review. We appreciate all of the feedback we've gotten so far, and we've gotten a lot of questions through the various reviews that we've gotten and emails. So please continue to send those in. And if you want to reach us, you can email us to feedback@mineralrightspodcast.com, or you can leave a comment at mineralrightspodcast.com, where you'll find the show notes for this episode as well and links to these articles. So let's just go ahead and dive in. I'll take the first one, Justin, and we're going to talk today a little bit about something that's a bit out of the ordinary from what you normally think of from a minerals and mining point of view. And this article talks about deep sea mining. So deep sea mining could provide access to a wealth of valuable minerals. According to NASA and other industry experts, we know more about the moon than the darkest recesses here on Earth. While 12 individuals have set foot on the lunar surface, only 3 have visited the deepest part of the ocean. Satellites have mapped the moon with a pixel scale of around 100 meters, but the seabed has only been cataloged to a far grainier resolution of 5 kilometers. To take nothing away from man's astronomical achievements, reaching the bottom of the sea still represents a significant technical challenge. Even if the deepest parts are avoided, including the Mariana Trench and its record depth of 10,994 meters, traveling to the seabed often means a shadowy descent lasting more than an hour and enduring pressure thousands of times stronger than found at the Earth's surface. As the prospect of deep sea mining comes closer into view, businesses will begin scrutinizing the industry financials in more detail than ever before. And aside from intellectual curiosity, there's one particular factor that is tempting businesses to make this arduous journey, and that's deep sea mining. At the bottom of the ocean resides a wealth of rare minerals that could be the key to powering the global economy of the future. It also could provide a lucrative revenue stream for any organizations that can reach them as quickly, cheaply, and as sustainably as possible. So this article talks a little bit about some historical background as to deep sea mining, and I won't read into all the details, but just to say that we've kind of known about the rich variety of valuable minerals that exist on the sea floor from back in 1873, when the HMS Challenger recovered a number of manganese nodules from the bottom of the Pacific, Indian, and Atlantic Oceans. And obviously at that time, the process of dredging the seabed was really not technically feasible given the technology back then. Now that we're getting into the time period where we actually do have the technology, there are lots of organizations that are looking into it. And so there are 3 groups of minerals found in the seabed: seafloor massive sulfides, cobalt-rich crusts, and polymetallic nodules. And collectively, these contain rich deposits of copper, manganese, zinc, cobalt, platinum, and a host of other valuable metals. Although the price of these minerals remains volatile to an extent, they have stayed relatively stable for some time. Depressed metal prices have slowed the progression of the deep sea mining industry in the past, but the likelihood of history repeating itself appears slim. So an interesting comment that this article mentions is that these minerals that are found underwater may actually be essential if humanity is to successfully transition from a fossil fuel-based economy to a green one, which is kind of an interesting concept. Now, the other flip side of that is, the thing that they're really trying to get a handle on is what are the environmental impacts of deep sea mining. So if you create a plume of debris, but when you dredge the sea floor, how's that going to affect the sea life, and is it going to recover? Because things move pretty slowly when you talk about temperatures and the kind of fragility of life down there. So kind of interesting article, Justin. I think, it's one of those that somebody will eventually do it. I think there's still got to be a lot of environmental impacts that need to be studied. And obviously they've got to see if it's going to actually be economically feasible to do it.
You got it. And, just like oil production, it's going to be a matter of them getting the technology to a point that it is financially feasible for them to be able to access those. And I know 6 months, a year ago, there was some talk as well about China pulling hydrocarbons, and I believe even in a solid form from the seabed. So it's just a matter of time before we start seeing that happening.
I agree. Yeah. And what you're referring to, I imagine, are the gas hydrates that exist at high pressure and low temperatures that exist in the seafloor. So that's another thing that you could see that is related to the oil and gas industry, which we normally talk about. But kind of a cool article and a lot of technical detail about the different types of deep sea minerals. So if you guys are interested in that, it's a interesting read.
Absolutely. And the next one's kind of an interesting story as well. So Bullock signs a bill clarifying fossils are part of the property surface rights in Montana. Montana Governor Steve Bullock has signed a bill to clarify that fossils are part of a property surface rights, not its mineral rights, unless a contract separating their ownership says otherwise. The bill, which passed unanimously in the House and the Senate, was prompted by a legal challenge over the ownership of valuable dinosaur fossils unearthed on a central Montana ranch in 2006. The dinosaurs appeared to be locked in a battle when they had died, making the value of these just amazing. Marianne and Liege Murray, owners of the surface rights where the dueling dinosaurs were found, along with Clayton Phipps, who found the fossils, joined Bullock for signing along with representatives of the Museum of the Rockies and other dinosaur museums around the state. Phipps' 12-year-old son, Luke, gave Bullock a fossilized rib and tail vertebrate from a Triceratops, along with a picture of him with the Triceratops he found when he was 10. The Murrays are in a legal battle over the ownership of the dueling dinosaurs, which are believed to be worth millions of dollars. The Murrays bought the surface rights to the land where the dinosaurs were found from the brothers Jerry and Bo Severson, who retained most of the mineral rights. And this kind of seems, I guess, a little bit illogical, but we're always pushing those boundaries.
Yeah, and it's one of those. I was kind of surprised that any fossils that were found aren't part of the mineral estate. There's been a few other articles we've come across that have kind of flipped the default assumption that you would have going in, that mineral rights represent everything below the surface of the earth. But there's I guess a fine line there, and at least in Montana, they're saying the fossils that are found are actually part of the surface rights. So something to keep in mind if you're a fossil speculator, I guess.
Absolutely. Well, and something to mention with this as well, a full panel of the Ninth Circuit has agreed to rehear the case. Hearing date has not been set, but it'll be interesting to see what happens with that.
Yeah, especially with this legislation that has passed. Well, so why don't you dive into the next one?
You got it. And this has been all the buzz the last few weeks, but Occidental wins battle for Anadarko as Chevron exits bidding. Occidental Petroleum Corp struck a $38 billion agreement to buy Anadarko Petroleum Corporation after Chevron Corp bowed out of the bidding, ending one of the most high-stakes energy deal dramas in years. In seeking Anadarko, Chevron and Occidental coveted prized assets in the heart of the U.S. oil boom, the Permian Basin of West Texas and New Mexico. Occidental's emergence as the likely victor means it is now poised to swallow a company nearly its own size as it bulks up in the region. Chevron had agreed to purchase Anadarko for about $33 billion on April 12th, but Occidental offered the oil company $38 billion on April 24th, and then boosted the cash portion of its offer on Sunday. Occidental's deal with Anadarko is expected to close in the second half of 2019. The exciting transition will create a global energy leader with a world-class portfolio, proven operational capabilities, and industry-leading free cash flow metrics. Occidental Chief Executive Vicky Holub said Thursday in a written statement. Chevron Chief Executive Michael Ruth said in an interview that his company could have outbid Occidental, but instead will take a $1 billion termination fee it negotiated as part of its earlier deal with Anadarko and return the cash to shareholders through share repurchases. Cost and capital discipline always matter, Mr. Worth said. An increased offer would have eroded value to our shareholders. Shares in Chevron rose 3.1% on Thursday. Occidental's stock fell 6.4%, while Anadarko's shares declined 3.2%. Occidental's increasingly aggressive efforts to win in the contest for Anadarko, including lining up to $10 billion in financial backing from Warren Buffett's Berkshire Hathaway, and a deal to sell Anadarko's Africa assets for $8.8 billion to French oil giant Total SA, helped Ms. Holub outdo a much larger rival. Berkshire is set to receive shares of preferred stock in Occidental with a coupon of 8% a year, as well as options to buy additional shares. And I know, Matt, from talking to some people I know in West Texas, people are really actually excited about this. They're glad that Occidental is taking this over rather than Chevron. They seem to have more confidence in Occidental being able to develop those resources in a timely manner.
Yeah, that's interesting to hear because, you'd think that they're going to be under quite a bit of pressure to, prove that this is the right way forward. So I guess to the extent that that puts the pressure on management, they are going to need to prove that, that Permian asset that they're acquiring, that they can make the most of it. The interesting thing that a lot I've heard on the flip side of that is, there's been some sentiment that Occidental is overpaying for Anadarko, given where Chevron's original bid was. And so, interesting that originally Chevron had bid $33 billion to buy Anadarko, and this Oxy bid of $38 billion is significantly higher. And interestingly, Chevron took the money and ran, and they're going to use that to buy back stock and create some value for shareholders. So I think it's Chevron is not terribly sad, I guess, that they got outbid, because they did end up with a billion extra dollars that they can use. Now, the other thing too is if Chevron had won, it would have created a 75-mile wide strip of continuous land in the Permian. And it would have really allowed that combined company to expand, large scale drilling operations. And they had also kind of hoped to bring their manufacturing style processes to Anadarko's position in Colorado's DJ Basin. The other thing that would have been kind of interesting is it would have made Chevron the fourth ultra major, in terms of, I'm assuming they mean in terms of market cap. It would have been alongside BP, ExxonMobil, and Shell. That combined size of the company, but that is not going to happen. They declined to increase their bid, and looks like Oxy is going to be the winner in this battle. So to your point, though, the big carrot there is the Permian Basin assets. Sounds like they're going to need to divest, if I remember correctly, $10 to $12 billion worth of assets to help fund the acquisition.
You nailed it. And I find it very interesting that they're using the leverage of Berkshire Hathaway to help make this come to fruition. And I think the development of the resources, I think that a lot of that is counting on Oxy to still prove to be a very nimble company and able to move very quickly. And bringing on all of this merger, it'll be interesting to see if Oxy can keep the progress going forward while still merging those two companies.
Yeah, definitely. And especially in the Permian and the DJ Basin. So if you have mineral rights in those two areas, that'll be something to keep an eye on, especially if you have wells that are operated by, Oxy. So it'll be interesting to see how that affects what they're going to do.
Absolutely. It's been big news in the oil world.
All right. Well, that's all that we have for this month. You can always go to our website at mineralrightspodcast.com to check out the show notes. And like I mentioned before, please leave us feedback at mineralrightspodcast.com, and let us know if you have any questions. We're going to be featuring a Q&A episode. We've got a critical mass of questions that we've accumulated here over the past couple of months, and so look for that coming up, and definitely subscribe so you don't miss an episode. So again, this is Matt Sands and Justin Williams signing off. Thanks again.
Thanks again.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.